You're watching Bloomberg Law. I'm Lee Pacquiao. On September 20th, a subcommittee of the United States Senate Banking Committee will hold a hearing to examine how high-speed computerized trading systems, which account for more than half of trading volume in equity markets, impact the broader economy. This hearing comes in response to a series of high-profile market failures, starting with the so-called flash crash in May of 2010, right on through this year's failed Bats Global Markets IPO, technical problems with Facebook's IPO, and the recent computer glitches that nearly tanked trading firm Knight Capital. Joining me now is Jack Reed, Democratic Senator from Rhode Island, who will be chairing the hearing. He joins us from Capitol Hill. Senator, welcome. Thanks for joining us.
Thank you.
So in your view, do existing regulations adequately cover high-frequency trading?
Well, I believe that high-frequency trading has provided benefits to the marketplace, to retail investors, et cetera, but because of the changing nature of technology, because of some of the incidents like the flash crash, we have to look closely to see if the regulatory structure provides a kind of prevention of systemic problems as well as fairness, transparency, and confidence in the market. So that's the question we're going to deal with at our hearing.
Yeah, it's got to be a maddening problem. I noticed that the SEC is meeting with industry representatives about computerized trading early next month, and the New York Stock Exchange is in discussions with high-frequency traders to try to head off more of these computer glitches we've seen over the last year. That said, why does Congress really need to step in here? Can't regulators and the industry just deal with these problems on their own?
Well, this has to be a process which is both conducted at the regulatory level. They have primary jurisdiction and responsibility, but legislatively, I think it's important for us to get the record, to establish the record, to have individuals who are in the marketplace come forward, testify about both the benefits and the potential problems. We have to inform ourselves as Congress, but also we have to be prepared if the regulators ask for more legislative authority.
Too much regulation of Wall Street has been a consistent theme of the Romney campaign. That said, in this election year, is it realistic to think that the Congress will be able to regulate high-frequency traders? Is it going to be possible in any sense?
Well, this question is, can we provide information and public discussion of a very important issue to all investors, that is the fairness of the markets, the accuracy of the markets, and help, in fact, the regulatory process move forward. And it's an opportunity for the industry as well as for those who are looking at some of the shortcomings to come forward and testify publicly. I think that's a help to the process. And it's something that doesn't require or immediately dictate a legislative proposal. But unless we provide the context, unless we provide sort of the public exposure, these issues might be neglected by regulators, and they might cause us to look back regretfully and say we should have done something.
Senator, U.S. equity markets are supposed to be a level playing field for all kinds of investors, big companies, small companies, and even individuals. That said, how is it possible for an individual investor ever to compete with high-frequency traders who buy and sell in milliseconds? Aren't individuals always going to be second in line to essentially robots that can enter these orders faster than any human possibly can?
Well, that's one of the fundamental issues that we're trying to address. Because of the automated trading, the algorithms, etc., a human being is not as quick, obviously. But that's why we have to have a regulatory structure that ensures that we've done our best to make sure that the process is transparent, that there's no special carve-outs for some type of traders versus the public, and that the public knows at least that some trading mechanisms have advantages versus others. So part of our effort is to inform the public as well as to ensure the markets are well regulated.
A very large pension fund body in Australia just asked regulators in that country to declare a moratorium on high-frequency trading until they can study the issues involved and get ahead of any potential problems. Do you think we need a moratorium on high-frequency trading in this country as well?
I think we need much more emphasis on what's going on. I think we have to look very carefully. We've had some wake-up calls, the flash crash, the situation with the Facebook public offering, and so we've been put on notice that we have to look. Again, I'm encouraged that the Securities and Exchange Commission is holding a forum on October 2nd, but Congress, and that's why we're moving, Congress has to look also. And if it is clear by the evidence that we have to take steps, that we should prepare to take those steps.
Senator, just in closing, I'm stunned as to how quickly the market can outstrip regulators, specifically in this context. That said, can your subcommittee and regulators like the SEC and CFTC ever really stay on top of innovations in the market? Or are you always playing a game of catch-up, trying to solve the last financial crisis as the next one is brewing?
I think one of the problems we have, and it's beyond just high-frequency trading, is the ability of markets to incorporate new technology, new innovations, new changes much faster than regulatory bodies. Some of that is a function of the resources that regulators have. In the Dodd-Frank Act, we tried to give the SEC at least the ability to acquire new technology, but there's always this question of markets that can invest huge amounts of capital very quickly, whereas regulatory bodies don't have that same responsiveness. And that's something we have to consider when we design rules and regulations and when we regulate. There is always this trade-off between the speed of innovation in markets and the capacity of regulators to provide for fairness and transparency. That's one of the issues that's fundamental to our review, not just in this case, but in practically every case.
Senator Reed from the state of Rhode Island, I want to thank you so much for your time today, sir. This is really interesting. Thanks for talking to us. If you'd like to learn more about the cases and issues we just discussed, be sure to go check out our offerings on BloombergLaw.com and also on the Bloomberg Terminal. You can see more of our videos on YouTube, and you can follow our updates on Twitter. I'm Lee Pacquiao. Thanks for watching.